Good morning. Welcome to Stock Market Today. It's Thursday, March 12th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas. They hit your inbox every trading day before the market opened. So U.S. equities were lower in Wednesday's trading, undercutting Monday's low and now trade in bear market territory. It took only 19 days for the Dow Jones Industrial Average to move from new highs to a bear market, the fastest pace ever. Industrials, financials, and energy were the worst performers. Healthcare outperformed, but still fell by almost 4%. Treasuries were mostly weaker, with the curve steepening. There really was no safe haven yesterday. The dollar was weaker versus the yen, stronger on the euro cross. Gold closed down 1.1%. WTI crude finished down 4%. As we get to the desk this morning, futures are under pressure, down more than 5%. Asian markets were sharply lower overnight, and European markets are also under pressure. Treasuries are rallying across the curve after falling yesterday. Dollar is weaker on the yen cross, but stronger on the euro and sterling crosses. Gold is slightly weaker. WTI crude is down nearly 5% and down almost 25% on the week. So here's the waterfall decline in the S&P 500. At this point, we're looking for key retracement levels, and we're drawing the line from the late 2015, early 2016 lows to the highs from middle of February. A 50% retracement is being tested in the pre-market here this morning at around 2,600 for the S&P 500. We've already undercut the 38.2% retrace. Should 50% give way, we have to start thinking about a 61.8% retracement down to the 2415 level. Should we rally from here? Resistance is in the zone between 2,900 and 3,000. RSI does flash a possible negative divergence, positive bullish divergence rather, as yesterday's low was met with a higher low for the RSI, and Chaikin money flow is neutral, hovering right around the zero line. So continuing to watch key levels, continuing to look for some amount of support at those key levels, as well as signs that selling pressure is becoming less intense. Today we look at breadth, and we're going to see that so far is not the case. So our market in a minute. What are we writing about in the note today? Well, stocks enter a bear market, and the World Health Organization has now called the coronavirus a pandemic. All sectors closed lower as averages dropped more than 4% on the day. Breadth metrics continue to weaken. Still no sign of less selling pressure. Small caps continue to be the worst of the major market ETFs, and futures, as we said, do point to a lower open today. Looking at the power bars for the major indices, the Dow lost nearly 6% yesterday. No bulls, 6 bears there. The S&P 500 closing down close to 5%, 7 bulls to 125 bears there. The NASDAQ down 4.3%, a slight outperformer, I guess. 5 bulls to 23 bears. Small cap stocks underperform once again. Just reiterating, they are the worst performing of the major market ETFs. 4 bulls to 512 bears. Bonds were not a safe haven yesterday. Bonds ticked lower in price yesterday, down nearly 3.7%, sending yields higher. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bearish. Major markets across the board, however, away from these, are somewhat mixed, but there's no doubt about it, folks. The trend is now lower. Turning now to our stock of the day, and this is actually the stock that I'm featuring in my note today. And a lot of times we try to look for, where are potential opportunities. And Activision Blizzard is a name that we would be looking at. Not necessarily saying to get involved today, but we'd be looking at it because of its relative strength, right? Chaikin Power Gauge rating is bullish due to very strong price volume activity and positive expert activity. Strong does have poor financial metrics, but when we take the 20 factors, we come up with a bullish rating for a stock that's still in a strong trend by our definition above a rising long-term trend line. Notice how it's kind of held up here, where a lot of the stocks have broken down and broken down in a meaningful way. The industry group is weak, but that's due to the power bars being weak. That's essentially across the board. As we look at Activision here, our bullish rating is met with a stock that's actually seeing the intensity of its outperformance increase over the past few weeks. So when we talk about finding the relative strength in the market for names that could be potential leaders when the market finally does stabilize, this is what we're talking about. I'm not saying you need to go out and buy Activision right now. I'm saying Activision is a name that you should be very high on your watch list, and not just because it starts with the letter A and your watch list is probably in alphabetical order. Money flow remains bullish. Stock is rounding out of an oversold condition. So I think we want to continue to watch Activision here. If it continues to hold above this 56 to 58 zone and the market begins to stabilize, this is one of the names that I think makes sense to come back to when we're looking to start to put money back to work here in the market. Turning to the sector tracker now, the movement of the major sectors over the last 5 days. Nothing is green, right? Everything down over the last 5 days. Right now, it's really just a function of finding out what is down less, right? Again, skirting to the quote unquote relative strength, or the areas of the market that have been less bad over the past month or so. And so, we come to areas like healthcare and consumer staples, tech towards the top of the list over the past 5 days, but still under a fair amount of pressure. Along with communication services, discretionary REITs, utilities, and industrials are middle of the road. Materials, financials, and energy at the bottom of the list. The bottom of the list really hasn't changed all that much. A lot of the key drivers that are keeping the relative performance of these groups weak remain in place, right? We've talked ad nauseum about energy, financials, obviously seeing the headwind, or the headwind from much lower rates, materials levered to the global economy. Same with the industrials. But really, safe havens right now are only seen on a relative basis, right? They've held up relatively better than the overall market. And that's important because we want to continue to focus on where is the relative strength. And what I can say is that the relative strength is not in our industry in focus, which is mining services. Over the past 6 months, the group has underperformed the S&P 500, underperformed by 24.5%. Its power bar ratio, which measures future potential, is very weak. There are no bullish stocks and 6 bearish stocks within this group. It's currently ranked number 14 of 21 subsectors. To me, that just means there are a lot of subsectors that have 0 bullish stocks here at Chaikin Analytics. Now, this group has moved up 4 slots over the past week. What's interesting is that gold has held up. The gold miners have not. Royal Gold, very bearish. They're under pressure. AK Steel, AKS, very bearish, continues to be under pressure. Same with Cleveland Cliffs, CLF, very bearish stock. So we hesitate to go bottom fishing in the group in general. And right now, it's just these 3 stocks are indicative of the group and the names that we want to continue to avoid. And just you can see it here, folks. The XME is the ETF that tracks this group, and it has a bearish ETF power gauge rating here at Chaikin Analytics in a weak trend below a precipitously declining long-term trend line. Relative strength tells the story, right? We want to look for the areas that are green, that are up here. This is not one of them. As a matter of fact, the relative strength has been, or the relative weakness rather, has intensified over the past couple of weeks. So we have a bearish fund underperforming the market with bearish money flow. Folks, this is the falling knife, and we do not want to catch it. Despite the rally in gold, the miners are not being helped by that situation. We just do not want to go anywhere near this group for the time being. We don't catch the falling knives. We wait for signs of stabilization to go along with bullish ratings, not bearish ratings, and we're just not seeing it yet for a group like the miners. Taking a look at yesterday's movers and shakers, names that were trending yesterday, or in this case, on the bullish side, bucking the trend. Digital Realty completed an exchange offer. That stock was up by nearly 2% in a very red day yesterday. Gilead still getting some support because of drugs that could potentially help with the coronavirus. That stock higher by 1.88%. T-Mobile, didn't see any real news there. A little bit of a story stock given their merger with Sprint. That stock up by 1.73%. Akamai, AKAM, up 1.1%. Nothing company specific there. Potentially, maybe investors are figuring as fewer people go out, they'll be consuming more of their content at home online. Akamai does have a content delivery network. I'm speculating here. That's just my top level view of what could potentially have been supporting a name like Akamai yesterday. And then AON up 95 basis points on the day, as I guess investors are somewhat encouraged by their acquisition of Willis Towers Watson, ticker symbol WLTW there. On the loser side of the board, kind of continues to be a lot of the same. Norwegian Cruise Line, their dividend being called into question by investors. That stock down nearly 27% yesterday. APA, oil-related name, down 23%. Noble, oil-related name, again, down 20% as the energy names just continue to be under pressure. Boeing catches a downgrade today. News hits the tape yesterday that they were beginning to draw down their credit line. That stock lower by 18.15%. And Occidental Petroleum down with the energy space, down with the price of oil. It was noted that Carl Icahn was increasing his stake in the company, but that did not help to stem the tide. That stock lower by 17.71% on the day yesterday. So we've been saying don't go bottom fishing in the energy space, and that continues to be our view. We're of the view that you don't go bottom fishing, period. Now, turning to breadth, as we do every Thursday in our note to Chaikin Analytics clients, and the breadth indicators are still under a lot of pressure. We're not seeing signs of diminishing selling pressure just yet. Taking a look at the percentage of stocks in the S&P 500 that are above their 200-day moving average, right? We made a new low with the market yesterday, right? We're looking for signs of a bullish divergence. We want to see the market make or test recent lows and see this indicator make a higher low. That has not been the case just yet. That's what we mean when we're not seeing signs of less selling pressure. Breadth continues to weaken, right? Under 50%, it's hard for the market to rally. All right, that's been the key line in the sand, right? We've been seeing it for a while. We drop below 50%, the market's likely to be under pressure, and that does remain the case today. Looking at the intermediate term, the percentage of stocks above their 50-day moving average at around 3%. Still looking for signs of a bullish divergence and a break back above the 30% mark. That tends to be important for this measure of intermediate term breadth. Still not seeing it just yet. At the same time, not shown here, but if we look at the percentage of stocks above their respective 20-day moving averages, that's down at 2%. 2% of the stocks in the S&P 500 are above their 20-day moving average. We are now, in fairness, we're getting to very washed out levels that have tended to mark local lows for the market. So we are kind of on the lookout for that, especially as that 50% retracement level is tested here in pre-market trading this morning. But we're looking for a bullish divergence, right? We're looking for signs of stabilization in the marketplace. We haven't seen it just yet. Perhaps it starts to come into play. Perhaps that 50% retracement level becomes important. We just don't know. And until we see signs of stabilization, we think it's hard to be overly aggressive on the long side. If you're bottom fishing, if you're trying to catch the knife, not our preferred strategy. Would rather see signs that selling pressure is abating, and we just don't see it yet. Turning now to global stocks. Looking at a 5-year chart of the MSCI ACWI X US ETF, obviously down with the rest of equities and risk assets, but now getting to a potential support zone on a 5-year basis here in the call it $38 to $39 level, slightly below 38, slightly above 39. That's kind of the top end of that consolidation that took place from 2015 really until the beginning, late 2016, early 2017, before it finally broke out. So we'll watch this consolidation area fairly closely. What I will say is that I track 37 specific country ETFs on a daily basis just for a measure of trend and to get a sense of global breadth. And currently none of them, zero, are above their respective 200-day moving averages. So perhaps we pull into the support zone and find some support. That would be an encouraging sign, but we're trying to look at all the data points to see if signs of selling pressure are abating. And it's just not there yet, folks. I wish I could say more. The fund itself is deeply oversold, maybe beginning to build a little bit of a base on a relative basis, but there's not a lot here to get excited about. And we've shown this chart a few times this week. And I'm showing it again because even the safe havens weren't safe yesterday. The TLT, the 20-year plus Treasury bond ETF, we said that this was potentially a blow-off top, and we've seen now 3 big down days for the fund. Still above the moving averages. RSI working off an overbought reading, still in bullish ranges, but I just find it interesting that even the safe havens weren't safe yesterday. So, folks, a lot of this we talk about every day. Head over to chaikinanalytics.com/test drive to sign up for a free 14-day trial where you'll see my note every day. I'll be back with you tomorrow.